I'm going to talk in very low tones, even though my household is completely awake. It is 5:30 a.m. This is the Daily Stock Pick live broadcast at 5:30 a.m. Everybody knows I'm traveling next week. I still need to put out the schedule, but I'm traveling. So I have an 8:30 vet appointment to try and get the dog some shots, to try and get them to board because we've got to go out of town. I don't have a pet sitter, blah, blah, blah. But there's a lot to go over. Again, it's NVIDIA earnings day. If you're not as excited as I am, you are just not geeked up enough. This market, we're going to go over everything. Steve Cress posted something about alpha picks in a comment that I just want to point out to everybody, and we'll start with that. We're going to go over workday because I said yesterday, hey, this one looks like it. Remember, we had the bullish engulfing candle yesterday. If you want, go back and listen to that show. And I said this one might be good to look at. Well, it's probably going to get a cross up on the MACD, and it's going to get an entry into the 4-hour algorithm. So I think it's good. SMCI filed their long-awaited report. Is that a good thing? Well, it's up 20-something%. Where's that one going? We're going to go over seasonality because it's pretty clear what's going on right now and should you stay in. If you're nervous about your portfolio, it might just be because you listen to doomsayers and you know, not just myself, but Barry Ritholtz, who, legendary guy on Wall Street, said the same thing. Mag 7 chart, we'll look at that one. Calling all degenerates, Bitcoin is crashing, and you know who's buying? Ryan Cohen and GameStop. We'll look at some stuff like that. We'll go over an education play where Ross from Warrior Trading actually shows you how to use confirmation. ZETA on earnings. We're going to look at AXON on earnings. Tonight, NViDIA, Salesforce, Snowflake, IONQ, Mara, PSTG. And I asked Perplexity, if you had to play one earnings tonight, which one would it be? We're going to go over all of that. Let's look at the Qs. Now, first, I'm going to show you the comment from Steve Cress. So he addresses, if you are an Alpha Picks member, go over to Alpha Picks, and then you click on this brace for turbulence and scroll down to the bottom. He goes over 6 ones that you want to look at and kind of things. But I wanted to point out his comment here because down at the bottom, I truly appreciate all the thoughtful comments and loyal followers of Alpha Picks who took the time to read this article. My goal was to highlight the challenges. As a quant strategist for decades, I've observed a reoccurring pattern in the performance of high-quality quant stocks ahead of market turmoil. Much like Richter scale surging before an earthquake, stocks with strong fundamentals often experience notable price action before periods of rising volatility and market pullbacks. The cycle has repeated itself countless times over the years, and in my view, the current environment is shaping up as a textbook case. Investors' behavior is largely being driven by fear. For weeks, we've seen a rotation out of stocks with strong momentum and excellent fundamentals. Unfortunately, for some of our newer Alpha Picks members, the shift has coincided with their entry into the market. In recent days, the trend has accelerated with CNN Fear and Greed Index dropping to extreme fear, its second lowest in the past 52 weeks. Despite this broad market rotation into safe haven stocks, the underlying fundamentals of Alpha Picks hold strong. Out of 37 stocks in the Alpha Pick portfolio, 25 just reported earnings, with 20 beating analyst expectations and only 3 slightly missing. Yet just in 4 weeks, 15 stocks are down double digits, with 8 declining between 15 and 42%. Notably, 6 of these stocks exceeded earnings expectations while 2 narrowly missed. These sharp declines are largely sentiment driven rather than reflection of deteriorating fundamentals. While I don't have a crystal ball to predict how long fear and uncertainty will dominate the market, history has shown that when fear subsides, investors inevitably return to stocks with strong fundamentals, and those stocks tend to surge. This pattern has been consistent throughout my 35-year career. Alpha Picks focuses on stocks with strong growth, value, profitability, upward analyst revisions, and long-term momentum. These core attributes remain intact. He's basically going over what you should be feeling as an Alpha Picks subscriber. And it doesn't look good. Honest to God, it doesn't look good. The return in the last month has been bad. Short term, it's still a very stretched valuation on this, but they continue to provide great support. You can see right here, portfolio return 152% versus 58% during the same time period, the S&P. It's a long-term buy and hold portfolio. But he has been a quant master for years. I trust him. I'm not saying you should trust him. You should do your own research. I am staying in the portfolio. I am staying guided by the portfolio, and all of the stocks in there I own. All of the stocks in there I own. Okay, I just wanted to make sure everybody saw that comment. It is key. It's not just me saying, hey, stay in the market. It's Steve. So what am I going to start with today? I'm going to pat myself on the back as a freaking genius. Because if you listen to yesterday's podcast, and again, not everybody listens every day, but what did we do? We went into Trendspider and we said, okay, I want to do a bullish scan. And I went up into the upper right here and I looked at the daily bullish engulfing candles in the S&P 500. And essentially, scanning service is temporarily not available. Check out status for more details. It's not available right now, but again, it's 5:30 in the morning. They're probably doing some updates and things. But we went in there. We found Workday. And what did we find on Workday? We found out that Workday was a stock with a bullish engulfing candle on the daily. And we said, well, what does that tell us? It tells us that there's a bullish trend reversal in this stock. And on the 4 hour, we said, well, the 4 hour algorithm, an internal error has occurred. Performance chart 74% versus 35%. The algorithm had you out. And I said, I don't know this for a fact, but maybe the algorithm will tell us it's got a good reversal. Well, what did we see yesterday? We saw Workday kill it on earnings. And in pre-market, it's up 11% to 285. The algorithm didn't get you in yesterday. It most likely will get you in today with a gap up. So what should you do? Well, if you take a look at a long-term chart of this, you can see the gap up to 291. Where are you trading in pre-market? 287. So my guess is that we get above that. Do we get above this double top right here? Probably. Those earnings were good. Do we go above 300? Maybe. Nobody knows for sure. Just like Steve, I don't have a crystal ball, but the average price target 296. And if we go to FinViz, let's just go over to FinViz because let's see if people are taking up their estimates here. February 19th initiated, no price target there. February 19th, Morgan Stanley took their price target down to 275. They look foolish. Deutsche Bank on January 8th moved it up to 300. So you can see the target price from the most recent because AlphaPay or Seeking Alpha doesn't update their stuff as much as FinViz. 310. So do you want Workday? Do you want to find that kind of stuff? That's how you use Trendspider. Go back and watch yesterday's. I'm just going to pat myself on the back. So I thought it was good. I did not take that trade. Full disclosure, I was busy yesterday. I did not take that trade, but I like Workday. It's on the watch list. And you can look back on it. You know, it's been on the watch list for a while. I think D-Man brought it up. I think D-Man even has it. But SMCI, this is another one. I didn't think it was worth the risk throughout the day. If we look at this stock, this was crazy. I want to show you a 5-minute chart of yesterday on SMCI. And the reason I want to show you this 5-minute chart is we had no strength whatsoever. Nothing yesterday. This is yesterday where you gap down from 5150 to 51, and you had no strength whatsoever. Nothing. That's yesterday. Look at the past few days on this. And remember, yesterday was the filing day. So let's turn on the after hours. And boom, they waited till the last minute to absolutely put in their report. And they put it in. And then what do? They basically blame it on Ernst & Young. Stated concerns and subsequent resignation, we were unable to timely file our annual report. It was not audited. The special committee did not believe the resignation of Ernst & Young or the conclusions reached by Ernst & Young were supported by the facts. That special committee is one person. So I don't know what happens, but this one is up 20%, 25% in pre-market, 25%. And you can see it even gapped up this morning at 4 a.m. Again, it's right now 6 a.m. 6 a.m. The stock is trading at 56. Would I buy this one? Well, it actually becomes interesting at this point. If the NASDAQ doesn't delist them, and again, I don't know what happens. You can go and ask Perplexity what happens. But right now, the algorithm has you in at 31. It didn't get you out. That's what's crazy. I saw this turnover on the MACD and I said, you know what? It's got to come out. But if you look at this weekly, we touched the 200-day. And again, we're going to go over this in a little bit. But the 200-day is a key level on whatever chart you look at, whether it's weekly, whether it's daily, whether it's 4 hour, a 200-day moving average is a very good indication. And what did you do? You touched it. Your MACD is well down below the oscillator. You've started up. And this one has momentum. Now, I'm not going to, it doesn't fit my risk profile, but I do believe it's trading at 56. I think you've got 70 in this. I think you have 70 in this. Honest to God, I think you've got 70 in this. Because when we take a look at this, you've got on the 4 hour, you have the golden cross of the 50-day up on the 200-day. So I wouldn't go balls deep on this one. I wouldn't do that until we have some type of resolution, because right now it's just a filing. It's not like the NASDAQ has said, oh, okay, we're not going to delist you. It's just a filing. And I'm not even sure if it was audited. I didn't dig deep into this one. If you own this stock, I would urge you go into and research this one. But again, if you want that one, let's talk about the 10-year, because I published this on 2/14, so 14 days ago, the middle of February. Ryan Dietrich, and I told you before, you are here. Doesn't happen to be good to be aware, just to be aware of, hey, you are here. This is the second half of February from 1950 to 2024, and it was going to be tough. And you can see the returns. You are here. That was February 14th. Okay? What did he post yesterday? This should help the odds we finish green today. But we happen after a new all-time high and then 4 consecutive red days. Near-term weakish turn, but a year out, things are a tad better than my normal take. This is not a non-event. That's essentially what this is. A closer look at weakness after new all-time highs, S&P performance after an all-time high, and then 4 red days in a row from 1990 to current. You can see as you go out 12 months, your average return, 9.2%, your median, 11.6%. So the seasonal weakness is good. I would absolutely be buying this dip. I haven't bought the dip. I am absolutely going to buy this dip. I do think that it's good. But I want you to be aware of some things. Okay? I want you to be aware that this is at Barry Ritholtz. And Barry Ritholtz, he goes over here. If you're nervous about your portfolio, the closer to retirement you are, the more nervous you should be as it goes down 10 or 15%. If you're not close to retirement, don't worry about it. And if you're nervous, he said it's your news flow. Because the reality of this market is, and everybody's pointing this out, the reality of a VOO, okay, on a long-term basis, you can see on the 4 hour, it's come down to its 200-day. If we look at the weekly here, it hasn't come down to its 200-day. You're not even at your 50-day, which would be 517, and it's trading at 549. So right now, I would say If you're nervous, it's probably your news flow. Watch this Instagram post. It's a good one. And if you're not nervous, you're probably part of the degenerate crew. Okay? You're probably part of the degenerate crew. Because this one, GameStop here's another call to convert its cash into Bitcoin. That's it. I mean, this is crazy. This is calling all degenerates. I do want to go over real quick before we get into Bitcoin. By the way, Bitcoin crash, it was clear. This was January 27th. Jim Cramer said, you should own Bitcoin. Bitcoin is great. Have it in your portfolio. It's down 18% since then. I mean, the sign was clear. Now, I want to look at a couple of charts. The first chart that I want to look at is MAG7. MAGS is the ETF. It's not good. It's not good. This has broken its 200-day. Has it broken its 200-day in the past 22 months since it has been? Yeah, it has a couple of times on the 4-hour. Now, the 4-hour algorithm makes you 113% versus 109% if you buy and hold. The 4-hour algorithm has you out. Does that mean you get out of all your MAG 7 stocks? Probably not. I mean, the reality of MAG 7, this ETF, it's equal weighted. It has only been out for 22 months, and you see a straight up line. Okay. This weakness that you're seeing in my mind is just, it's Amazon being weak. It's Tesla being weak. It's NViDIA not reaching all-time highs anymore. That's where you're at. So it's a little bit stretched. But if you look at the 4-hour, again, you broke the 200-day. Do you want to start getting in? When the algorithm tells you to get in, you get in. Now, I think the market scanner, let's see, 200-day. Let's see. I do have stocks under their weekly 200-day. Let me see if scanners are available. It was scanning. There we go. It's going to look for it, but I think it's unavailable right now. It's just early, and I think Trendspider is doing some maintenance or something. But I want you to pull up a scan. You can find this in FinViz. You can find anywhere. Find a scan of stocks that are trading under their 200-day. On a weekly, on a daily, whatever time frame you want. But go and find stocks that are trading under their 200-day. You can go and scan these easily in Trendspider. It's kind of stuck right now. We're going to just reload that one and reload up the 4-hour algorithm. Let's look at that. But yeah, scanning is currently unavailable. So right now we're going to go back to the core investment. We're going to look at MAGX. Yeah, degenerates, we're calling you out. Crypto, it's in a weak state. Now, remember how I said, and this was back in, you can go and Google it, but it was based on this Instagram post, and it was from the compound. And basically Michael asked if this expert, I forget his name, but he said, hey, if you had one piece of information to know at the end of the year, this year, that was in your pocket to know where the stock market would end, what would it be? And he said it's the 10-year. Okay? He said it's the 10-year. Now, Mohamed Alarian, and just like that, the yield on the 10-year bond is trading below 4.3, down 50 basis points in just over a month. This is part of the concern. This is why most participants are afraid. Is because if we go over here and we go to market data and we go to the bond section and we look at the U.S. Treasury for the 10-year, let's look at how it's doing. This is the last month. You're seeing it decline. If it gets to 3%, if the bond yield is at 3%, right now it's 4.32, so we still have a large amount to go. But remember, it's down 0.5% over the last month. Okay? The high was 4.8. We've touched 4.8 a couple of times. 4.6 back here in April of last year. You touched 4.8 in January, and then you started to decline. Now, I'm not a bond expert, so I will not, absolutely not, spout off like, oh my God, this is horrible. Go and watch this clip. He outlines it perfectly. I'll put it in the newsletter. It's great. It's great. And if he's worried about it, I'm keeping an eye on it. Am I getting out of the market because of it? No. But as we crawl towards 3%, again, most bond experts are telling you, if you end the year at 3%, there is a problem. And that's what I'm keeping an eye on. I'm not rushing out of the market. I'm not worried about it right now for my 10 to 15 year timeline. But in 1 year, it gets my attention for this year. But again, I still say you buy the dip. You buy the dip. Consumers right now, and I'll read this little clip that I had. Notably, consumers are getting more pessimistic about the future of the stock market. This is from yesterday's consumer study or something. The Conference Board data showed that only 46.8% of consumers expect stock prices to increase over the year ahead, the smallest share since April 2024. Where was that bond rate at 4.6? Down from 54% in January. Folks not feeling good about the market. Consumers' expectations for stock prices to move higher in the next year fell in February by the most since March of 2020, Kevin Gordon. March of 2020 was COVID. Okay? Renaissance Macro Research highlighted how the consumer confidence report has appeared to regain significance for market participants. And again, data moved us down yesterday. Data moved us down. Go and look at it. Okay? The tech-heavy QQQ falls below its 50-day for the first time in 3 weeks. QQQ is where my portfolio is guided by. And QQQ, if you look at it daily, it's below its 50-day. It's below its 50-day. When was the last time? September. What happened this was January. We shot back up. You're in a range. This is the daily. Look at this range. I mean, this trading range right here. Until we get to the bottom of that trading range, I don't think I'm too worried. I want to buy more down here. Now, when you break this one, that's when it's time to maybe stop and maybe you go back down to the 200-day, but it will take a lot to get down there. Find stocks that are trading under their 200-day, and if they have positive momentum or positive earnings, positive kind of guidance, again, buy them. It's on sale. The tech-heavy QQQ ETF falls. You can see QQQ has a market value of $328 billion, delivers exposure to some of the biggest technology names. Apple, NViDIA, and Microsoft are the biggest. Despite tech's recent weakness, it is worth noting that the Invesco QQQ is only down 3.9% from its all-time high. All-time high. It's 102 holdings. And if you want to save some money because it's a long-term hold, buy QQQM. M. Okay? Drops more than 5%. 10 worst performing stocks inside the QQQ yesterday. You got MicroStrategy down 10%, AppLovin down 8%, Tesla down 8%, Intuitive Surgical down 4%, CrowdStrike down 4%. I own CrowdStrike. I will be buying more. Marvell down 4%, Palantir down 4%, MongoDB, Intel, DoorDash. Okay, find stocks that are beaten down. If you like the stock, go and buy it. Just make sure you have an elevator pitch as to why you like the stock, or just buy an ETF. One or the other. Costco showing incredible relative strength. Relative strength is an indicator on Trendspider. And you can see right there, it's booming in a market that's going down. And Costco at $1,055, it's super expensive. But if that one's showing relative strength in a place where, if we go and look at Costco, it's a hold in the quant. And the reason is valuation. 58 times forward earnings and growth of 5%, not in my wheelhouse, not something I necessarily want to look at. Oh, why is Trendspider effing up right there? There we go. The algorithm got you out with a 12% gain, and it's continued up. Are we going to go for another one? Maybe. But weekly, you're still stretched. Not crazy. It's just hanging on to its highs. Costco and Walmart, in my mind, Walmart at this point is a better buy than Costco. Walmart, the algorithm has you out, but it's going to probably rebound back to 104. It's a nice, steady growth. Is it expensive? Yeah, it's expensive, but it is what it is. So is Costco going to lead us back? Now, I want to show you this one. This is a pop quiz. This is from Ross. FMTO is one that he traded yesterday. And he shows you, it was the leading gainer in the market. And he shows you why he trades on 1 minute candles. Honestly, you take his learnings from 1 minute candlesticks and you trade it on a weekly. Same thing. Same thing. It's no different. Charts are charts. A 1-minute chart reacts faster than a weekly chart, significantly faster. A 5-minute chart will react faster than a weekly chart. Just understand charts. Okay, that is a great education video. It's all of like 30 seconds long. And if you want more, again, he's Warrior Trading on YouTube. He provides so much free information. Don't feel like you have to take his course unless you want to trade on a 1-minute candle, which I don't. I haven't taken his course, but I know all of his fundamental stuff. And I like it. He uses MACD. He uses those indicators. He uses momentum. He looks for flag patterns. He does a lot. I don't do all of that stuff. I'm very basic, but when I was day trading, and if I wanted to day trade, Warrior Trading and Ross is the guy. I would watch his videos every day. I wouldn't take his courses, but I would watch his videos every day. Now, earnings. An alpha pick, ZETA, which I had called out. Okay, this is the second half of the recording. The first half I did at like 5:30, 6 a.m. this morning. It is 27 minutes long if you've been listening for that long. The next portion of this is going to be earnings. So we just got through education and then the ZETA. Why was ZETA down last night? But I did release the savings bucket, how to save your money for financial independence for paid subscribers. I did that after I recorded everything. So you have that in your inbox for anybody who has Trendspider. Yes, they are dealing with a major outage. The first one that I've experienced, 5 years of actually subscribing to Trendspider, being an affiliate and a subscriber. Remember, I was a paid subscriber. God, the panic this morning when I didn't have this tool. Oh my freaking God. I went back to Active Trader Pro to see, can I do the podcast with Active Trader Pro? The answer is no. The answer is just simply no. There is no better advertisement for a tool than feeling naked when you don't have it. And that's the way I felt this morning. So I'm going to continue on the podcast, but just realize if you haven't signed up for Trendspider, this is something that's just out of the norm. And it's help.trendspider.com/status. And you can go and look at the status. If you still can't log in, I would suggest reaching out to them on Twitter. They are responding on Twitter pretty well. They're taking care of their customers. They're doing what they can. It is a network situation, so just bear with us or them. You know, again, I'm not part of their crew. I'm just an affiliate, but God, what an advertisement. There is no way I can go without this. And I texted them earlier. I said, you've responded. And by the way, the only way I'm updated on this is I use the contact us button in the bottom right-hand corner. That's it. If you can't log in, they reply to you on Twitter. And so they are great at customer service. That's why I'm an affiliate. That's why I like them. So let's go over some of the earnings last night. I was asked in the chat, and yesterday I went over how to get to the chat. If you go to the dailystockpick.substack.com, the chat's up here on the right. And Eli, I think, asked, why is ZETA down after earnings last night? It didn't give me an answer last night, so I did it this morning. I said, why is ZETA down after earnings last night? ZETA global stock dropped after its Q4 2024 earnings due to disappointing Q1 2025 revenue guidance. The company reported strong Q4 results with revenue up 50% year over year and exceeded expectations. Its Q1 guidance of 253 to 255 million fell short of 256.1 million consensus. This raised concerns about the slowing growth and momentum. Despite this, ZETA's full year 2025 revenue outlook surpassed estimates, and the company highlighted its long-term growth. So growth is slowing down. And so if you just look at ZETA and you pull this up, where are we on the morning candle? We're down 9%. Down 9%. It's continued its run. The 4-hour algorithm got you out in yesterday's candle. I do like it to come and fill this gap at some point, but things have changed. And so as an Alpha Pick stock, you will get an update in Alpha Picks. In fact, we'll get an update because AppLovin actually has a short report as well. But the stock slides as Q1 sales outlook falls short. That's it. This is Seeking Alpha News, and so they've got it. Update adds analyst reactions. You can read about it. It's down 8%. If you look at this stock, it has moved to a hold, and it's not a strong buy anymore. But I would say at a hold at $18, if you're looking to get into a good stock, this might be one. Again, this is for me, it's an alpha pick. So I'm not going to spend time analyzing it, but just realize that the short report that came out doesn't seem to be affecting this. If you look at Wall Street analysts, there's 14 analysts that cover this. They still say it's worth $35. Maybe not afterwards. You might have to look to see if this actually changes. Let's see if the report analyzed with AI. It lasts on 2/21. I have a feeling it will go out tonight, and it will probably update that. But again, use the tools that you have available to you and ask Perplexity why ZETA was down. Now, I do want to point out this particular email that I sent out, okay, February 17th. February 17th, it was on robotics. And I said, AXON, here's a stock to add to your watch list. Last year, this was a big social stock, and they are doing a ton with AI and paperwork in the police force space. It's interesting. And Trendspider posted, AXON just hit our CanSlim scan. Again, if you don't have that scan, CanSlim is a scan that you can do, and just Google it to find out exactly what it is. But the cup and handle breakout is a top watch into this week ahead. Again, this was February 17th. We are now at the 26th. Where are you today? Let's go and look at AXON, because they reported last night. I even put it in the newsletter yesterday. And I said, this might be a stock that you want to look at. Might be one stock that you want to look at. It is up 15% today. It's down from where it opened up. It opened up at 584. Its high was 600. It bounced off that 600. Will it get back to 700? Probably. This was a good report. Again, AXON is one of the leaders in the S&P today. It's a good report. It's still a strong buy in the quant. It's slightly expensive. Slightly, I say slightly, even though the PE is incredibly expensive, the growth is phenomenal. And this was just redone last night. So all of this is now this AI analyst. It's all done so you can read it and you can decide if this one should fit in your portfolio. Again, this is one of Shai's biggest ones. They killed it. I recommended this one that you buy on the dip. I may trade this one after earnings. I'm not going to buy into this huge strength, okay? But I know if we get down to 550, which is 565, where we get under the 200-day, I think then you start to add to it. Is it expensive? Absolutely. Is it still stretched? Yep. But we're seeing this one come down perhaps to the 50-day. Remember, I talked about moving averages before all of this. Make sure you know where your stocks are in the moving averages. Above the 50-day with a contracting Bollinger Band, with the MACD kind of coming down with the RSI at 53. Probably want to add to this one. Do I want to add on a 5-minute chart? Well, on a 5-minute chart, it looks overextended. Just looks overextended. But again, make sure you know your charts. And when I post something like this, if you're sitting there and saying, why didn't I buy AXON when he told me to? It's because you didn't do your research. I didn't buy it, but it doesn't fit my profile. You know, this is somebody like Shai who's in their 20s who wants to take a chance on. This is one of the ones that you read the elevator pitch on. And then you go and research it. And it did great. Now let's talk about earnings tonight. Because on Earnings Hub, we have a ton of stocks tonight that are reporting. You've got NViDIA, you got Salesforce, you got Snowflake, you got IONQ, you got Mara, you got C3 AI, you got Synopsys, you got eBay, you got Pure Storage, you got Teladoc, you got Joby, you got Paramount, you got Kratos, you've got Honest Company, you got Sweetgreens, you got Ambarella, you got Heiko, Nutanix, and you have a Brazilian energy stock, Petro Brasilio. How's that for Spanish? So let's go over it. First off, we got NViDIA. Okay? Everybody knows about this. I expect it to be fine. I expect them to beat. I expect them to do everything. It's trading weak into this earnings. It hasn't traded tremendously. It's up 3% today at 130. Every time you've dipped under that 130, it's been a buy and it's come back. Okay, where does it come back to? 140. So do you want to buy it before this one? The algorithm just got you out in yesterday morning's candle. Do I want to buy it now that the algorithm has me out? Probably not. I mean, I'll wait till the algorithm gets me back in. If you didn't buy this at the 120 level, if you didn't buy this at the 130 level, why are you getting in now? If you're not in this, don't get into it. If you are in this, I'm holding. I mean, here's the thing. Jensen is doing a 7 p.m. interview on CNBC tonight. Do you think he would be, if this stock is, if he expects this to be down 20%, do you think he'd be going on TV at 7 p.m. for a full hour-on interview? Maybe to calm the market? I don't know. But it makes sense to me that he knows something. They may be guiding. He may be just trying to calm the markets at 7 p.m. because they may be saying, hey, 2026, we may only grow by 50%. The market cap on this stock is too big for it to double. The options market is implying a 7% move. The market cap is $3.1 trillion. There is no company in the world that is $6 trillion. You are not going from 130 to 260. You just won't. Now, could you go to 170? Yeah. You could go back up to close to a $4 trillion company. You could jump Microsoft and Apple as the largest companies in the world. You could do that. But you better damn well have a huge growth number. Again, they grew their forward revenue 92%. They're expected to grow 70%. It's just going to be a tough guidance. Now, Salesforce, I own as well. I can talk about this one. Expectations are high. Last time they reported $2.41. This time expected to report $2.61, $10 billion in revenue. They didn't hit $10 billion of revenue last time. They hit 9.44. So expectations are high. I own this. I will look to be adding to this one again. I didn't get in on this one in time. Okay. It got me out right there at 327. It got you out the next candle. Now, do I want to buy this one on weakness into this earnings? No. You saw the gap up on the last earnings. It was great. And you've got a gap here between 337 and 342. Do I want to add to that? No, but I do see 311 and it's trading right now at 312. I do see that as support. Where do I see that as support from? If you pull back the weekly, it was the 2022 highs. That's where it was. And here in 2024, it provided resistance. Now, this particular candle, the low is 303, so it broke it. Now, is it precise? No. But you can see the MACD still a little bit stretched. Our RSI's in no man's land, but your Bollinger Bands are cinched up. Tells me it's going in one direction, either up or down. By the way, that's not Nostradamus kind of, theory right there. There's no crystal ball. Telling you a stock is going to either go up or down. Come on. That's just common sense. It's going to go up or down. So now Benioff, their CEO, is on Twitter touting how all these companies are using Salesforce AI with the chat agents to solve customer problems. Do you think he'd be doing that if they weren't going to show a tremendous growth in the AI portion of their business? He wouldn't be doing that. No, I mean, that was just a few days ago. So I expect this one to get back to all-time highs at 352. If we go over and we look at Salesforce, CRM is the symbol, and we look at the summary, we can see it's a hold in the quant. The valuation is incredibly expensive. Again, it's a $292 billion market cap. This isn't even $1 trillion yet. Now, the 52-week range are right in the middle between 212 and 369. A little bit on the high side. I expect this one to get back up. Wall Street expects it to, the price target is 394. Am I buying before earnings? Probably not. I mean, I own it already, but I do want to add more to my position. Another one, Snowflake. This one I sold at 190. Why? I identified the strategy that I want. It's right here. This is the weekly. Did we pierce 200? No. The high was 194. And it's rejected off there. The MACD just got above the oscillator. The RSI's at 55. Have a strategy. That's key. Now, when we go over to Earnings Hub and we look at Snowflake, it's lowered expectations. They reported 20 cents per earnings last time, earnings per share. Revenue of $942 million. They're expected $955 million, 17 cents per share. So it's lowered expectations. But it's at the top of the trading range. The middle of the trading range, 150. We're trading at 168. Do I want to buy, on a weekly when the MACD seems to be crossing down, when the RSI is going down? No. What about the 4 hour? Well, the 4 hour makes you 8% versus buying and holding loses you 5%. And the 4 hour has you out. Am I going to give up a pop? Maybe, because this one's highly volatile. If we go over here and we look at Snowflake, it's incredibly expensive. We can see the valuation is just out there, 233 times forward earnings. But their growth, profitability, momentum, and revisions, it's all good. It's still a quant hold. Where does Wall Street think that it's worth? $196. That's 16% upside. For me, the downside of going down on this weekly, down to the bottom portion of this, is not worth the risk to the upside. The upside is just there. I sold out of mine. So I'm not looking to get back in. Then you go over here to Earnings Hub and you can see one of our favorites, IONQ. This is quantum computing. They're expected to lose 12 cents. That's half of what they lost last time. Now, could they continue to go up? Their revenue, 10.56 million last time. They're only expected 10.28 million. You look at IONQ, and is that a buy in the quant? No. When you look at Wall Street, they think it's worth $47. There's only 5 analysts that cover this. Throw that out. Their valuation, I don't know how it to be. They're not making money. Because when you go to their financials, what do they have? 37 million in revenue. The company has a $6.43 billion market cap. It's expensive. It's incredibly expensive, even with the growth. So do I expect this one to go up? We can go over here and look at the chart. This one doesn't fit my personal risk profile. And when I look at it, the 4-hour algorithm makes you 547% versus buying and holding makes you 437. That's fine. Either number would be good with me. But when I look at the weekly, it just looks too damn stretched. The Bollinger Bands have cinched up, but we're on the bottom side of the 9-day. The strategy for me, I'll sit and hold. I'll wait. I'm not looking to buy it at this valuation. Under 30, I might think about it. But remember, just a few months ago in November, this stock was trading up below 20. So do I want to, rush into something like that? No. The next one, Mara. This is Marathon Holdings. This is crypto. They're expected to lose 8 cents per share. They lost 32 cents per share last time. They're expected to $183 million in revenue. Last time they made $131 million in revenue. We can go and look at the chart. This is particularly around these miners haven't traded well. Look at the weekly. It just hasn't. And you're on the bottom side of that 18. You're trading at 12. It's weak. Crypto is weak. And this is a company that I don't want to put into my portfolio. I'd rather own IBIT. And IBIT isn't exactly performing great. The valuation on this one, B+, but they're not making money. The growth sucks. Okay, profitability sucks. Momentum sucks. Revisions, they're up. What does Wall Street say that this is worth? They say it's worth $26, which is 110% gain. There are 14 analysts that cover this. Seeking Alpha analysts love it. They love it. When you look at this one, you look at this slider, look at the 52-week range. You're at the bottom of the 52-week range. Okay, our buddy James Ford just published something on January 23rd. Mara, Trump trade that wasn't, a strong buy. We can look at that one. He's down 36% since he said this was a strong buy. I don't like it. Not my thing. Again, if you pick stocks, that's something, you're never going to be 100% on this. So one that I really like, and I've written about it before, is actually Pure Storage. So I went to Perplexity and I said, how has Pure Storage stock reacted to earnings announcements in the last year? I mean, we can go over to Earnings Hub and we can look at Pure Storage. Where is it? PSTG. There it is. PSTG, 41 cents. They reported 50 cents, so it's reduced, but their revenue is expected up. So I asked, okay, of the last quarters, how did they react? Well, December 3rd, the stock rose 22% after earnings. August, the stock dropped 15%. In May, a modest increase of 0.4%. February of last year, the stock surged 25%. So let's see how this stock is trading. Where's the actual the chart telling us? Well, 4-hour algorithm that makes you 108% versus buy and hold at 93%. We're out. Are you getting back in? Looks like it could go up. Let's look at a weekly. Is it performing well? Well, we're a bit stretched, but we still have confirmation. Well, not quite confirmation, but you're up 3%. It's trading into that range. And this is a continued trend upward. You can see the 50-day and the 200-day, they're trending upward. 200-day SMAs provided significant support when the stock breaks the 50-day period. So you can see that. See how it trades in between the 50 and the 200? But we're above the 50-day. The time to buy was back here in November, where it pierced the 50-day at 45. And you're at 63 right now. So Pure Storage, if you wanted to play it, it looks weak. I don't know. It doesn't fit my personal profile because when you go over here and you look at Pure Storage, PSTG, what's the market cap on this one? 20 billion? That's not big enough for me. It's not something that I like. Do I have it in ETFs? Probably in QQQ or something like that. Or XLK or something. Probably owns, Pure Storage. But 1 year, you're up 52%. Year to date, you're up 3%. 5 years, you're up 281%. Look at the 52-week range. It goes all the way up to 73. Okay. What does Wall Street think that it's worth? They think it's worth 72. So the upside from 63 is 73. Doesn't fit my thing. But if you like this, then I think it's good. So then I asked Perplexity, if you had one stock to buy before they announce earnings tonight on Wednesday, February 26th, what would the stock be? It should be a stock that has surged on earnings announcements for the last 5 years and has a big percentage up to its Wall Street price target and expectations are low. Guess what it freaking picked? NViDIA. Based on your criteria, NVIDIA stands out as a strong candidate. NVIDIA has consistently surged on earnings announcements over the past 5 years, driven by leadership in AI and semiconductor technology. Expectations for its earnings tonight are high, with analysts forecasting a 63% earnings per share growth and 73% revenue over year. But challenges like export restrictions to China have tempered sentiment, leaving room for upside surprises. Now, how's NVIDIA trading, the chart-wise on this one? It's in that little range that we talked about. Today you're up 3% at 130. Your upside, if you buy at 130 to me, is 140. Again, a 7% move is what the options market is implying. For me, the upside doesn't make sense. If you don't have this one yet, don't load into it. That would be my guidance for you, but I am not your financial advisor. This is not financial advice. I hold a tremendous amount of NVIDIA myself, and I'm sitting here holding. And the reason I'm holding is because this is the key for AI, and I do believe, even if we see a pullback today, that this is one to just sit and watch. It's like Apple. I don't know when I'm going to get back into Apple. Apple is way down today. Apple's down like 2%. This is the one that was holding up over the last period. But look, you have a button hook. Again, if you want to learn about these terms or anything, my newsletter has all of this stuff in the education section down here. You can learn all about the charts, all about technicals, everything that you want. There is a tremendous amount on there. But Apple's down 1.56% today. Look at the MACD. Every time the MACD's gotten up here, we've seen it pull back. Where do I expect it to pull back? To the 220s. You're at 243 right now. It's stretched. Okay? The RSI was up at 65. Needs to come back down. It's at 53. Now, what do I expect? I expect NVIDIA to report good earnings. I don't expect them to report anything poor. But good earnings today are not enough. It's going to have to be perfect. If it's not perfect, were getting taken down. The first part of this recording, I went over how seasonally, sometimes this is weak, and we can go and look at the seasonality of this. Let's see the week of the year, and we're going to go back to, let's just go back to 2006. What does this week look like? Not great. Not great at all. But the upcoming weeks are fantastic. 45% is where you're at now, then 47% next week, 58% the following, 63% win. Look, so when do you want to buy it? You want to buy it when it's weak. If I were looking to buy NVIDIA right now, boy, the 20th week of the year might be when I go in. The 24th week of the year might be where I go in. The last week of the year might be where I go in. That's the last 19 years. Seasonality plays a good portion. Oh, that's Apple. Let's go look at NVIDIA. Sorry, I was looking at Apple. Why was I looking at Apple? So this week, 35%. This is when I want to go in. But I don't want to play it before earnings, because what if earnings takes it down by 7%? If it takes it up by 7%, you're probably still fine for the next 4 weeks. But then you got a couple of weeks taken off. Again, this is 19 years of this stock. So I like the stock. Perplexity likes the stock. There's a lot out there. Your opportunities are endless. Again, Trendspider, it's a little bit broken. Wait to sign up, but I would take advantage of the $20 for 14 free days. Take advantage of anything. If there's one caveat, if there's one big thing for me, it's how naked I feel without this tool. And it's essential for my trading. It's essential for my well-being. Psychology plays a lot in managing your portfolio and trading. I can't live without it. I tried to go back to Active Trader Pro. I couldn't do it. Just couldn't do it. And the other thing, premium and alpha picks. Alpha picks I love. I'm in ZETA, even though it's down 10%. I'm going to wait to see what Steve Cress says about it. I see what it is, but I still think it's got great fundamentals. Now, I read that note from Steve Cress at the beginning. And where do you get all this? You go to Linktree. You sign up here for Trendspider. You sign up here for the bundle. You can get Webull. Join Webull. You can get Alpha Picks. You can sign up for my newsletter. Save $20 off your Visible Mobile. You can get a discount off of Tesla. You can sign up for AT&T. Follow my trades on Savvy Trader. You can gift me with PayPal, Venmo, or Cash App. Okay, that's it. 31. This is over an hour. This is way too long. Okay, I'll talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts